Hi everyone, welcome to FOREX Trading Empire YouTube channel. In this video, I'll be doing a trade review on GBPUSD. So this trade was executed on the FOREX Trading Empire community, and the trade result was posted into our Telegram channels, explaining that I'll be giving a review on this particular trade I took on the 7th of July. Before I start, make sure to like and subscribe to the YouTube channel. This is the daily time frame of GBPUSD, and I'll be talking about bias first before going into lower time frame. So the whole bias came from the daily time frame. I got the idea from the daily time frame on where I'm anticipating price to trade to. Looking at this daily time frame, you can see price retraced to this daily fair value gap, traded off the daily fair value gap. But before price traded to the daily fair value gap, you can see there's an internal shift in market structure where price took out this high, traded lower, took out this low, and this low recently respected this fair value gap. This daily fair value gap from this candle's high to this candle's low, respected it, created a new swing high. Price traded lower, took out that sell side liquidity, played to a daily fair value gap. Price respected the daily fair value gap, traded to this fair value gap, which is still a daily fair value gap. Respected it, created a down close candle. Now, the trade was executed on this day, which is the 7th of July. I was anticipating lower prices because saying the fact that price did an internal shift in structure and price respected this daily fair value gap with not much of a momentum, leaving this swing low, now sweeping this swing low before the retracement back to this daily fair value gap, and seeing this candle we're expecting the daily fair value gap ending up as a down close candle. I was anticipating this candle to be a down close candle going for this candle swing low. And my target was to see price go for this candle's low, which is a daily low. I was looking for price to trade to this daily low as my target. Now going to the 1 hour time frame, whenever I'm using the daily bias, I go to the 1 hour time frame to look for more confirmation, which is going to be the trend time frame. I want to see the trend align with my narrative on where I'm anticipating price to trade to. So first I establish the narrative from the daily time frame, having that clear idea on where I'm anticipating price to trade to. Then I go into lower time frame, which is the 1 hour time frame, to look at price, look at the trend, identify short-term liquidity sweep, and the power of three on the 1 hour time frame. Then I anticipate price to trade to my targets. Then I use the 5 minutes for my entry, which I've been explained many times in the Forex Trading Empire community through the mentorship program. If you're interested, the link is in the description below. If I were to look at the opening price, you can see price open. I'm anticipating a down close candle. Price open, traded higher, took out buy side liquidity. After the run on the buy side liquidity, price traded lower. Traded lower, you're looking for a discount liquidity because this is the accumulation phase. Price manipulated the accumulation, took out this equal high liquidity, price accumulated. Now this is the manipulation phase. After the manipulation phase, we're looking for the next draw on liquidity below the opening price, which is the daily low. This is the previous day's low. So we're looking for price to trade to this previous day low. Price took out the buy side liquidity, traded lower, head to the daily low. Moving to the 15-minute time frame, you can clearly see the trend after the run on the buy side liquidity and how price traded lower. Now I personally took the trade from this fair value gap because this was during the London section. This is during the time period in which I personally execute my own personal trade. During this time, it was currently midnight based on my own trading time. It was during midnight. And during the London section, Seeing this 15-minute shift in structure gave me a clear direction on price going for this daily low. When you go to the 5 minutes, you will see the entry more clearer on how price was expected, the fair value gap. I mostly talk about the 3 a.m. to the 4 a.m. setup. You can see this is 3:25, and you can see there's a fair value gap aligning with the 15-minute fair value gap, and price retraced, respected it, traded lower to my target. So on the review that was being posted on the Telegram community, you can look at the MT5 screenshots. The entry was at this candle. This was the entry candle that I used for my entry. Price traded into losses a few pips, but later retraced because my stop loss was at this high. Price retrace led to the target of the daily low. Now, if you were to trade the Asian section, so I'll be turning on the section indicator. If you were trading the Asian section, you can see there are many ways for you to take advantage of this setup as long as you have the narrative. The 1 hour time frame is aligned with your narrative, which is the bias. You can see how price kept trading lower to the next draw on liquidity below the opening price, which is the daily low. So this is one of the most, I can say, easy to find trades if you know how to apply it correctly. It's just a simple power of three from the opening price, aligning with your daily narrative. And it's one of those trades that I like to do trade review on because I know that if you can pay much attention and do your back testing correctly, you can easily find setups like this on past price. First, you need to have a higher time frame narrative on where price will trade to. Those are the levels where you are anticipating price to run to. The 1 hour time frame is the time frame you look for a liquidity sweep, which in this example, price took out the buy side liquidity. You look for a liquidity sweep with the power of three in mind. You want to see price run that liquidity with the power of three, which means the running on the liquidity was supposed to be the manipulation phase. And after the manipulation phase, you wait for a 5 minute shift in structure or 15 minutes shift in structure. You can toggle between those two time frames to see which best gives you a good description on where price is actually trading to. Then you stick to the trend till price runs out that liquidity below the opening price. Then you can still look for confirmation after retracement to a 1 hour fair value gap, which that would lead to this lower prices. This is the continuation phase during the New York section. But in this example, I'm only doing a trade review of this specific trade. You can go back and watch this video a few times to understand the process. From the opening price, first look at the buy side liquidity. We're looking for lower prices to the next 1 hour sell side liquidity because we are anticipating lower prices. Price took out the buy side liquidity, traded lower, took out the daily low as our target. While in the Telegram, MT5 screenshot that I took, this was the candle that I used for my entry. As soon as price retraced to this 15-minute fair value gap, I used it as my entry to anticipate lower prices. So that is it for this trade review. Make sure to like and subscribe to the YouTube channel. See you guys in the next one.